Welcome to Penrose Learning, where we make understanding easy.
You begin by narrowing the field so your work is precise. Use a screener to set universe and filters. Revenue growth, debt ratios, and return on equity matter because they separate steady winners from noise. Once done, save the filter and export the top candidates. Make sure to include multiple time frames. Check 1 year for momentum, 3 year for consistency, and 5 year for resilience. This first step saves hours by focusing your analysis on stocks with real fundamentals. You now go deeper into fundamentals and valuation to answer why a company should outperform. Start with the income statement. Confirm rising margins and sustainable EPS growth, because revenue without margin improvement can mislead. Then inspect the balance sheet for cash runway and looming debt maturities. Once comfortable, run valuation metrics, P/E, EV/EBITDA, and PEG, and compare versus close peers and sector medians to spot discount or premium. Use these combined signals to rank candidates for technical review. You complete the process by aligning technical timing and risk controls with your fundamental conviction. Map moving averages and support levels, and look for volume-confirmed breakouts or clean pullbacks to buy. This reduces entry risk. Then scan for upcoming catalysts that could accelerate the thesis. Once aligned, define position size with a 1 to 2% risk per trade and set stop loss and target prices. If price action invalidates assumptions, exit promptly. Key troubleshooting. If unexpected
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.